What are some brutal truths about day trading that newbies should know? This video is in no way meant to discourage you from trading, be it stock trading, forex trading, options trading and the sort. It's just that I find that most of the time, new traders, and even traders who have been around the game for some time also make these same mistakes. Hi, welcome to the channel. If you are new, please consider subscribing, so that you don't miss future videos. Remember to hit the like button just to motivate us to continue making these videos. By the way, if you are interested in making money online via trading etc., visit the links in the description box below. Let's get into today's video. Here are a few things that I have noticed most people, including myself, who lose money do that greatly decrease your probability of success. 1. Do not think you will get rich quick. I repeat, do not think trading is a shortcut to getting rich. Trading or investing is nothing like what you saw in the Wolf of Wall Street movie. You do not make a few trades on your yacht while sipping champagne with supermodels and make money. Instead, you sit at your desk for 8 hours watching charts until the market closes. Once the market closes, you continue searching through charts until the adrenaline and caffeine wears off, and you find yourself in the weird part of YouTube. It's hard work, trust me. Speaking of YouTube, do not believe any YouTuber who claims to have turned $500 into $500,000 in 1 year, or claims to have makes over $100,000 in 1 day, or is selling a trading course that promises 100% wins, or claims they only work for 1 hour per day. This is simply not true and is just used a marketing tactic. If these claims were even remotely true, they would be all over TV on a daily basis, and not have to bother with YouTube. I have looked and have yet to find a single verifiable account summary for any of these people who make such wild claims. However, there is still a lot of quality content on YouTube that will teach you how to trade and analyze charts. Just take some things with a grain of salt. 2. Do not take trading advice or trading signals and setups from random message boards. Anybody who spends their day posting on message boards about hot stocks or hot forex signals is not somebody you ever want to believe. Most often than not, people you talk to on message boards are beginners themselves. When I combed through Telegram for months as an example, and joined many trading groups on Facebook, I quickly realized that most the gurus in there didn't know what they were talking about most of the time. 3. Do not gamble, this is trading. A big misconception that people have is that the stock market or the forex market is gambling. However, if you manage your risk, do your research, stick to your plan, and know your risk-reward ratios before entering a trade, your odds of winning are incredibly higher than that of a slot machine at a casino. 4. Do not involve friends or family, especially in money matters. As Biggie Smalls once said, money and blood don't mix. Do not take advice from friends about stocks or trades if they do not have their own money in it or trading themselves. On the other side, do not give advice to friends or family about a stock or forex setup you like, because if it doesn't work out, you'll never hear the end of it. Guys, do not trade on behalf of friends. Even if you are able to make them money, there are a lot of legalities involved that put you at risk, and the day you lose their money, you will also lose their friendship and trust. 5. Remember, even the experts make mistakes. Just because someone is talking stocks or forex or options on CNBC, or Bloomberg does not automatically mean they know what they are talking about. A study by CXO Advisory Group found that in the past 8 years, gurus were only right an average of 47% of the time. That is less than pure chance. Even the most notable guru on CNBC, Jim Cramer, has an accuracy rating of just 47%, and was even on TV multiple times telling people to buy Bear Stearns just days before the stock price collapsed from $70 to $2. 6. Only use money you cannot afford to lose. Even if you are the best trader or investor in the world, the stock and forex markets come with a lot of risk. Do not put your rent money or monthly grocery money thinking you will flip and live happily ever after. Yes, you might flip it once, but stats show a different story. 7. Do not be caught in FOMO. The fear of missing out, also called chasing trades, is when you see a stock or a forex pair moving fast and jump and hoping that the price will continue to go in that direction. This is one of the main reasons I lost money in the beginning, and is still something I can have trouble with on occasion. You will find that most of the time, by the time you try to catch the fast-moving candlestick, it has probably done its move and it quickly loses momentum, leaving you in trouble. 8. Do not fight the market. Admitting you are wrong is tough for a lot of people, understandably. However, the market is always right in the long run, and if you try to fight the market with anything less than a few $1 trillion, you will get crushed. I battled with this for a long time. When I would be in a losing trade, instead of cutting my losses and getting out, I would double down multiple times until I would lose a substantial amount of money. The only way you can have $1 million in your brokerage account, while being arrogant enough that you think you are smarter than the market, is if you start with $2 million in your brokerage account. 9. Do not think technical analysis is all you need. If big news about a stock or a currency comes out, the technicals become irrelevant, so always keep watch for headlines. Learn fundamental analysis basics. 10. Do not lose control of your emotions. You are going to go through a ton of various emotions when trading, it's understandable. However, losing control of your emotions can lead to you making irrational decisions, which will cost you a lot of money. Think of trading as a numbers game rather than a money game. People work hard for their money, which causes them to become emotionally attached to it. When people lose something, they are emotionally attached to their thought process becomes clouded, and they don't think in a logical manner, causing them to make decisions that worsen the situation. Reminds me of my ex. There are so many factors that go into trading the markets that nobody knows everything. What I am sharing with you here is just to help you get started and give you a few tips to point you in the right direction. If you learned something new in today's video, please remember to click the like button. Leave a comment with your thoughts in the comment section below. Again, hit the subscribe button so that you do not miss future videos. We will see you in the next video.